Good morning, everyone, and welcome to the Quantum Leap morning homework session for February 24th, 2014. For those that are visiting through Twitter or watching this on YouTube after the fact, Quantum Leap is a self-organized learning environment. We are a bunch of retail traders that come together in a private Skype room. We've had the room open now for about four years, and if you're interested in coming and checking it out, you can send me a contact request through Skype at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. We come together to talk about the market, talk about trading, and then each morning we come into one of these live go-to sessions to go through and do our daily routine, getting us prepared for trading and setting up our trade levels and looking at the market and putting it into context. So if you are coming in and watching the video after the fact on YouTube, you might want to skip ahead. We do go through a series of routine of looking at the macro to the micro. We don't skip the routine because it's what gets us prepared for trading, but you might want to skip ahead to get to a little bit more in-depth chart analysis. Let's get going. You need to get the legals out. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors can lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please do your own due diligence and trade your own trade plan. All right, so I want to start again. We've been looking at the COT report and watching it the last couple of weeks. There's three main areas that are reported on the COT for the futures. It's the large spec and the commercials and the small spec. And this line right here in the middle is your zero line, and you can see that clearly both the large spec and commercials are net short, leaving the retail or the small spec net long. And this generally will lead to some type of a topping pattern because they're leaving the retail to chase that high, to be bag holders, and they'll sell into this rally as they increase their short positions. So just keep that in mind. Doesn't mean that the top is in, just means that the market is positioned for a topping pattern to come into play here. Let's now go over and take a look at the numbers. Of course, we're currently trading 1839.50. We have our year open, which is going to be a key number as it has been for the last 6 days as we come back up here, 1837.75. Above it, we have a bull year. Below it, we have a bear year. So far, the bears have been in charge and keeping us below that 1837, and every time we come up here, we get slapped back down below it. So be interesting. There is a cup and handle formation on the 5-minute with a break above 40.50 that will give us a measured move up to 49 to make all new highs. Of course, the key areas that we're looking above is that 45.75, which is the year high, and then the 46.50, which is the all-time high and the high from 2013. Currently, our month high is just slightly lower at 1844.50, and our month low is down at 1732, way below us. We opened the Globex this week at 1835.25 and currently trading above the Globex or the weekly open. Looking at the intraday numbers, Friday in Globex we opened up at 1836, had a high of 43.25, a low of 35.25, and we opened in range at 1840. We broke both the IB to the upside and the low side. Again, we talk about this opening swing, paying attention to the opening swing. Anything above 2 will give you a clue that the market on open orders are disparate, or they do not have perceived value as the same, and you're generally going to lead to a rotational day. And the neutral day means that the first hour high was broken and the first hour low was broken, and that is definitely a rotational day. The initial balance was high 43, low 36.25 for a 6 3/4 point range on the IB, very normal range. Our 1230 number, our RTH high and our RTH low were all higher, and we accepted value higher at 1842. Even though we had a sell-off into the close, they did not shift value back down. So the reason that we're coming back up here is the fact that they left value up here at 42. Our RTH close was 1834. That will be our gap close, so pay attention, and that's right by that key CLVN. Anything else jump out at me? 20-day ATRs, they've been expanding. You can see we're getting a little bit of contraction in the Globex, a little bit of contraction in terms of the 20-day ATRs after expanding up to, for the full session up to like 24, 25 area. Our value area high was, our value area, I should say, was higher, with the high being at 43 and the low being at 37. So our value area, except for this one day here, continues to get higher. So they're accepting value higher. And then we had an IV break, the first break, to the upside at 10:05, and then later in the afternoon we broke to the low side with that sell-off into the close. So let's take a look at our daily report. So far, we don't have any real big news. We've got PMI at 8 o'clock that's coming up in about 8 minutes. These all times in here are central. The ATR range based on the full session, which is still only the Globex, high at 41 and low of 29.25, and you've got yourself a ATR target to the upside at 1851.75 and to the low side 1850. 1850 is very significant because it's right there at that key line in the sand. We went down there last week and hit that, tested it, just pushed through it slightly, hit that week low at 17.25, then bounced right back and got back above it. We do not want to see it close below 1818. That could be the first signs that this rally is going to be waning. Okay, let's go take a look at the macro to the micro. Always start with the monthly. The monthly, very much intact. We're trading near the all-time highs and at the highs of the last previous 2 months. We are above the 9 and the 20. We've got good slope and separation, so the trend is very much intact on the monthly. Same thing on the weekly. We'd come down. We've seen this week. We saw this weakness, but we did not close below it, and they're currently trading above the 9 and the 20, and we're getting slope and not quite getting separation yet, but the trend is still very much intact on the weekly. On the daily, we had broken down, created these 2 tech gaps, closed the 2 tech gaps, popped up back above. We do have that naked cross there at 1794.50 area, but we are trending up. We are respecting the 9 EMA. Got another little bit of a tech gap. We had one right here. We came down and closed it. Got another one going right now. It's not a real big one, so I'm not looking for any real pressure to come down and close it yet. I think we go up and fulfill this measured move today, possibly. And then, the slope and separation is definitely to the upside. Going over to the geometric chart, we continue to come up here and test the upper line. There's 3 forks on this chart. There's the long-term fork that we've been watching for months and months, and there's the opposing downward fork that we were watching after we put in the high of the year, and then I added this fork about 2 weeks ago, I believe, and we've come up back inside the lower channel of the upward sloping fork, the long term, and got inside of this line, tested the upper line of the downward sloping fork, broke out, and then we were looking for that move to come up and test this upper line, and so far we failed to break out of it. So I'm probably going to have to do some more work and try to see what we have in terms of formations and new forks that can be added. We do have this energy point, which is due tomorrow down here at the 17 area, which is the week low from last month. From last week at 17. 1817 and a quarter. So this is due tomorrow. If we fail to break out, we're likely to come down to find buyers down again at that 18, and we'll probably push through and test this energy point. And then if we get back inside this downward sloping fork, then we've got to look for a bigger move down to come in, test the 20 SMA and possibly come down to the center line of this intermediate fork here, and that would take us down in around that 1785. But 1794.50 is my big target below. So let's just take a look at the trend coming into the RTH session so far. The 4-hour, we've lost slope and separation. We really just are consolidating sideways here, so no trend on the 4-hour. On the 30-minute, we do have this upward trend, got a bit of a tech gap going on right here. Tech gap will probably likely bring us down into the 1838 area. And we're currently, trading, 1838.75. So not much to come down and close this gap. But we do have slope and separation to the upside. So in the 30-minute time frame, we are showing some upward trend. But when we look at the 5-minute, you can see that we've come down and closed back below the 9 and the 20. We've got an MA hug here, decision point at 1839. Of course, this decision point is interesting because if we go to this chart right here, you can see that this is the cup and handle that I was posting in the room. You've got the larger cup, you've got the retracement down into between the 38.2 and 61.8 with the rim line just above this 4075 area. And again, it's nothing for this to come down. We just don't want to see it break this 61.8 again. In fact, you've got another cup and handle setting up. Let's see if it validates what we need to validate for. So you've got a smaller secondary cup and handle right here, and we can just check that out. So validates at basically 1837.75 and invalidates at 1836.50 area. So it's not uncommon to see a larger cup and then a smaller cup and handle setup. But the measured move of the larger cup is all the way up here at 1849. So just if we break out and hold and close above this 1840.75, which is also that key CLVN, then I'd be looking for a larger move today to go up and take out the year high, the all-time high, and possibly come and fill this this measured move. Doesn't have to happen today, but this pattern is still in play until we break below 1833, and that 1832 is that key microcomposite VPOC and CHVN. So let's go take a look at the big picture on the composite. So we broke out of value, out of balance down here around that 1781. We'd come back down and tested this area, chopped around, and accepted value in around the 1781 microcomposite VPOC and CHVN at 8150. Broke out, came up, accepted value in around that 1814 area, and then broke out of there and came up and back into this balance zone that runs from December 23rd to January 23rd in around 3225. So the prior balance that we were up here was most accepted price 1832.25. We come back up here. Now we've been chopping around in the zone, and we have a microcomposite VPOC. We've accepted value higher at 1838 and currently trading just above it. So I mean, the numbers up here all play out the same that we've been looking at pretty much all week. I mean, the key areas that you're going to want to look for is you've got this 1840 and a quarter to 1840.75. 1840 and a quarter is the value area high and you can see we're struggling to break out of this value after coming back up here. We're really, every time we get above 1840, you can see all the, the wicks. They're not allowing to break out. The sellers are stepping in and bringing these back into value. The value area low for this period is 24.75 for the larger time that we were up here the last time. The 5-day or 6-day value areas are 39.50. So this whole 39.50 to 40.75 is a very crucial area. And if we can break out, we're breaking out of the prior value and we're breaking out of the current value, and we should get an equalization with a move to test that 45.75 and the 46.25 and 46.50 that are all sitting above us and go up and make new highs. Below us, of course, you've got this 38, which is the most accepted price up here at the last 6 days. Just below that, you've got 36.50. With that 34 CLVN that separates these two key areas. You can see the major two distribution zones within this value area is around 32.25, the former microcomposite VPOC and CHVN, and 36.50. So if we get back below 38, it's not, it wouldn't be unreasonable to come down and test this 32.25 again, and we could just play ping pong back and forth between these two areas. A really undetermined fair value in this distribution zone. They haven't determined which is the more accepted price. Right now they're accepting it higher, but that could change by coming down, and we can simply just chop around. So 34 is going to be a key area that you can trade on. If we get below 34, look for the rotation down to 32, get short into 32 with a push down here to come down to the other side of balance. And that other side of the balance, the value area low is 28.50 with that CLVN at 28.25. And that, to me, is the most important number in this area, because below that, I think that we've been down here a couple times. I think the next move down is to come down and test that 18.50 and that week low that we had from last week at the 18.17.25. So if we get below that 28.25, I think that we get a bigger move down, because they're running out of buyers with conviction to hold us up into this level. You can see with the wicks there, it's been a real struggle. But if we can, stay above 34, then I'd look for a move to, to break out of this 40.75 with the first target being that CHVN here at 42 area. You've got the 42.75 value area from when they were trying to hold the value up here, and you can see that this 38 is right in line with this 38 here in terms of trying to hold value. They couldn't hold it the last time, but they're back up here trying to hold it this time, and I think if we can accept it, this will finally give us a bigger move. I've said over the last few weeks that I didn't believe that this was a weak high, and I didn't think that these highs would hold, and we're likely to go and make some type of a blow-off top here before we get the bigger retracement, which we're all expecting at some point in time. But the bulls are back in, holding us above that 37.75 year open, and likely they're going to try to exert their manlyhood or their conviction and try to break us out to the upside. So let's take a look at what's happened overnight and move our numbers over to our intraday chart. We've got the 41 as the overnight high. Of course, that could change. We're trading near it right now, so we'll have to keep an eye on that. So our overnight high is 41, and our overnight low is 29.25. And our overnight VPOC, which is not likely to change, is that 39. So taking a look at this and we can get rid of this now. There's nothing really that the Globex is going to tell us. It was kind of all over the place. We do have the naked close down here at 1834. we're going to open up inside of value. It's kind of a messy profile from Friday, where they spent most of the day in the upper distribution testing, and then they had that sell-off into the close. But you can see this HVN, this volume spike that that was created at the 1834, where buyers stepped in and held us up. And you can see that there was a Mr. Sneaky here too, actually two Mr. Sneakies, and obviously we made a nice move off of that in the overnight session. Mr. Sneakies are indication of a possible rotation. So we've got two of them going into the close on Friday, and since the open on Sunday, we've drifted up and tested 41 to the high side. So 34 to me is going to be a key trade area, as I've mentioned below, and it's going to be that gap close as well. And if we break below it, my target, initial target to the low side is that 32.25, and a test of breaking out of the Friday range low, with a push through 32 to the other side of balance to take out that overnight low and that CLVN that I was just talking about, and the value area low for the 5-day or 6-day micro composite down here at 2850 area. So I'd be looking for responsive buyers to come in. So we're going to open up inside of range. If they come down here, look for them to come down. The first area that you want to pay attention to is this 37 area, and of course you've got the Friday's value area low there. You also have the year open at 37.75. So this will actually be a trade area. If we get below that 37, then I'm looking for a continuation down to repair this bottom half of the profile from Friday, take out the naked gap at 34 and test the CLVN, and this is where I'd be looking for responsive buyers to step in and hold us up. Of course, if they do come down to 37.75, we can also look for responsive buyers there, because you'd see the bulls and the bears fighting out that year high at 37, or the year open at 37.75 to keep us into a positive year. And if we could hold these two levels, and I'm not sure whether or not they might push it down and test that 34, but it's part of my hypothesis is to watch for the break of 37 and break us outside of Friday's value and come down and test that other side of balance between around that 36.50 CHVN, and really the defining line between 32.25 and 36.50. So we could come down there and take that out. If we can't hold, you know where my targets are. Extended target below the 28 is this 25.50. Come on. Is the first target, with the other side of that being that it's not showing up on here, but a 23.25, which was so important the last week. And really below that, my extended target down here will be that test of that 1850. Really 17.25 through to 1850 is what I'm looking at, and that will be my extended target down here. Put it in at 1800 here. And remember the ATR target, the 20-day ATR target for the full session, okay, as we calculated on our sheet, is down there at that 1850. So you see how those all blend together and have confluence. But my main hypothesis is that we hold either the 37 level or the 34 level, and we chop around in here with a upward push to take out the overnight high, 96% probability of taking out the overnight high or the overnight low, and with the overnight low being almost 10 points below us, the likelihood is they likely take us up and take out the overnight high. take out the naked VPOC, break above that 4050, 4075 CLVN, take us out of value of the microcomposite, and push through to the first target and the takeout of the VPOC from Friday at 42. So my first initial target is above us is going to be that 42, and then 43 is our value area high, so look for a push through, but really I'm looking for a breakout above the range at 44. And my main target above, again, is you've got the year high at 45.75, this naked close at 46.25, and the all-time high at 46.50. So my second target and main target above is to go and equalize. And I'm just going to put the target in around 46 in between all of that that mess, because you will probably have some responsive sellers stepping in. In fact, I would imagine that if we come up and do test this area, that you'll see responsive sellers stepping in, and we come down and tag the range high again from above, and then have defensive buyers stepping in to hold us outside of the range, and then a bigger move up. And then, of course, our extended target and secondary target above is that measured move up there at 1849, and really above that, there's a couple more targets. There's one at 54 and 56 that we've been watching, but right now I'm just looking for a roughly a 10-point to 15-point move and test of that 1849. Taking a look at the Keltner. A test of the upper Keltner line will take us up to that 42 in our first target, and the CHVN at 42.25. Our center line is sitting right here at 37. It's a key area we've got to hold. If not, look for a move down to test that 34, but the test of the lower Keltner line is going to take us into that 1832.25 area, or 1831.75. Taking a quick look at gold. We've got this cup in hand. We had the bigger breakout pattern that we've been watching, which is the descending broadening wedge, and we broke out. We were looking for a bigger rotation up, but we did, get this cup, and we were looking for a possibility of coming down and validating the cup and creating the handle, and that would take us down to that 1276 level or down to that 1240 level. But they're certainly finding, we saw some weakness, but they came down on the 9 EMA and held us, and now we're coming back. So we still can go higher and still put in a higher rate rim here, up in around that 1359, 1360 area, and then possibly look for the retrace to form the cup. We'll take a look and draw it. But right now, gold is strong. We're in this bigger bottoming pattern. My targets are still, my first major target above is that 1434 area above us, which was the last swing high, the fractal high there. And let's just take a look at what it looks like on the composite. Gold. And my microcomposite disappeared. So currently, right now, the microcomposite VPOC is 1321. We're trading in the upper distribution. We've got the 37.25 that we talked about last week, and a break of that would likely bring us up to test the 51, the bigger long-term price rejection. And then if we can get above that, the first target is up there at the 6190 area, and that swing high there. If we can't get above 37.25, then I'd be looking for a rotation back towards the first target, which would be 1324, then the 1321 area, and then the big one being that 1350, with the other side of balance being down there at 1304. And then if we get below the 1300, remember I said that's where you'd want to play the handle of the cup, and ride this down towards that 17 or that 1276 level, which would be the validation and the 38.2 retracement, with a possible bigger move down to the 61.8 retracement that's going to take us all the way down to 1242. So that's what I'm looking at in gold. That's what I'm looking at in the ES. Howard, you got anything for us this morning?
Just a couple things.
Okay, over to you.
So to start with, we'll go to our advanced declines and up volume versus down volume chart. And back here in October we had set a swing high, and just recently we've actually matched and slightly exceeded that high during our latest push. So this last swing low here was the first indication. We also had a secondary low here that the market was stopping its weakening pattern and starting to base itself, which it did here. And now we've pushed to a new high here, but we don't quite have the new high here, but within a couple of points. So no major divergence. And the unbalanced volume down here has formed a new high, so volume has definitely been supporting this price rise, even stronger than price itself. So very considerable market strength started coming in right here around the price low on February 3rd. So now let's go ahead and bring up the sectors here in a second. So we can see that sector performance has also, for the most part, been rising. There's a couple of sectors here that have started weakening a touch. Energy is one. XLP, which is consumer staples, has kind of stabilized here. Home builders has been pretty strong. It was one of the weaker ones. It's starting to rise into the top 5 here. But we still only have 2 sectors, make it 4 sectors that are above their year open. That's the utilities, which still is the leader, healthcare just behind, technology, which is kind of flattened on after its rise here, and materials. So that's all I've got for this morning, Doug. I'll turn it back over to you.
Thank you, Howard. Come on. I got a lot of stuff open up on my why won't for some reason it won't let me show on my screen. There we go. See my screen?
Now I do.
Okay, so here we are we're below the year open. We're testing the value area high. We've got 10 minutes to open. This is showing some weakness. If we break below this, the center line and this 37, I'd be looking for a move down in the open to come down and close this gap and test this 34. 34's got to hold. Or might get a push through down to, this 32 as they try to break the range to the low side, but I'd be looking for responsive buyers to step in between here. But if they break through the 34, I think they got to come all the way down to that 32 again to find buyers with convictions, and we could get stuck between those two CHVNs at 32.25 and 36.50. But hopefully they'll hold the 34, rotate back up, get back inside of value, get above the 37.75 year open, and push through, break out that 40.50, and go up and take out the naked Deepak in the high and test the other side of value and go complete that measured move and finally take out that year high and the all-time high and give us a new high. Anyway, that is going to be it for the morning homework session. As always, trade well, trade safe, and we'll catch you on the flip side. All right, I closed the recording down. Francis, are you still here? Francis.